Hi, thank you all for joining our webinar on shared kitchen insurance. This is our first webinar in a monthly series that we'll be doing with Kitchen EDU and the Food Corridor, and we are so excited to have Flip joining us today to talk about some exciting things. So, my name is Tyler. I'm the Director of Special Projects with the Food Corridor, and I quickly want to just introduce who the Food Corridor is in case anyone is unfamiliar. We are a shared kitchen management software platform created for the industry. So, what does that mean? We help operators with everything from streamlining booking by different calendars and spaces to your billing process, automating monthly or hourly billing, charging for storage, fines, all of the admin stuff that's not necessarily so fun but necessary for running your operation. And then we help with onboarding and compliance through our app. So, right in the app, you can manage your onboarding of new members, make sure that they're remaining compliant with their food manager certification and insurance. We actually integrate with Flip right in our platform. It tracks the expiration date of policies. It's very easy to use. It's free for kitchens to turn on. Very simple. You just go to your profile, check that you agree, turn it on as an option for your food businesses to utilize, and they can go through to the Flip website, choose the right policy for them, and it gets uploaded directly into their profile. So you can help make sure that everyone is remaining compliant and keep your health department happy, right? Everything all in one place. We also run the kitchen door. This is the number one search that comes up when food businesses are looking for shared kitchens in their area. This past year, we synced the kitchen door with the food corridor platform. So now those food businesses that are finding your kitchen through the kitchen door go directly into your leads manager where you can organize and communicate with the leads coming into your kitchen so you can qualify and get renters in faster and start making money, right? And then we have Kitchen EDU. This is our educational arm to the food corridor. We offer resources and tools for every stage of the operator journey. We collect data nationwide on the industry. We have a monthly newsletter that's packed with resources and events and tips. And then we host our annual Shared Kitchen Summit and Golden Whisk Awards, which is a celebration of everything wonderful that you all are doing in the industry. And this year we are going to Providence, Rhode Island in the fall. So get excited for that. We are hosting a summit speaker info session this week on Thursday. I'll send out links to all of this in our follow-up email along with the recording of this webinar. Next month, our webinar will be an Ask the Operator webinar. We'll have a few different operators coming in to talk about how to manage conflict and enforce policy within shared kitchens. We also run cohorts alongside of our tools. Tomorrow, we kick off our Shared Kitchen 101 cohort with our toolkit. And then next month, we begin a prep table cohort alongside our Prep and Prosper workbook. So again, I'll follow up with more information on all of that. What we're all here for today is to talk about insurance. So when we were thinking of what to start this webinar series with, one of the most requested topics we have at our summit, most talked about points in the Network for Incubator of Commissary Kitchens, our Facebook group, are questions around insurance and how to handle different situations that come up in shared kitchens, and what you should look for in an insurance policy. So we are so lucky to be joined with Kyle Jude, Program Manager at Flip, who is going to try and answer as many of those questions with our time today, but then also talk about a really exciting policy that they're developing specifically for shared kitchens and talk about a way that you can help shape that policy. So, with that, I'm going to turn it over to Kyle as we go through this webinar. If you have any questions, please put them in the chat. We will be going through them at the end. And again, we'll try to get through as many of those questions as possible. So, Kyle, take it away.
Hey, thanks, Tyler. And thank you all for joining. Shared kitchens are some of the most innovative spaces in the food industry at this point in time. But, from an insurance perspective, they're probably some of the most misunderstood. So I'm really happy to have you all here so we can kind of talk about insurance needs and how to make sure your business is properly insured. One of the big misconceptions is that a lot of your traditional insurers, make is, oh, it's a shared kitchen. We'll just write them a restaurant policy, and it just doesn't work because they're not really designed to handle a dozen different um, people that are coming in and out of the kitchen 24 hours a day, making all sorts of different products, different methods, things like that. And so those traditional policies just don't handle, you know, a lot of the shared kitchen space needs. Um, and y'all have posted some really great questions. So as I talk through, what you have, I do want to touch base on some of those. And one of the most important ones that kind of came up is whose policy actually pays when something breaks. That was one that kind of resonated a lot. And there is no real clear answer to that. Um, it really depends on who owns the product, who caused the damage, how your insurance policies and how your contracts with your tenants are written from a commercial kitchen standpoint. So when we look at different types of policies, you have your kitchen policies. They often cover, buildings, owned equipment, but they may exclude stuff like mechanical breakdown, food spoilage, damage caused by third parties, or tenant product loss. And then you have your tenant policies that usually cover their own liability, but they don't really cover damage to shared equipment. And so there's some gaps there that from an insurance company that we're trying to work on and we're trying to fill and make a policy that really works for you. So the best practice you can have is make sure that you're clear on who owns what, who's responsible if something fails or something breaks, and you have clear understanding of what your tenants insurance coverages are and what your insurance coverages are to make sure that as many gaps as possible are filled. Just getting a general liability policy a lot of times is what people think, oh, that's all I need and I'm good to go. I have a general liability policy, but that's just the tip of the iceberg when it comes to the shared kitchen space. Um, you're looking at, if you're doing co-packing, you're going to need some sort of, product recall insurance. It's so frequent that, you know, businesses out there, they'll make something and, something happens in the manufacturing process and you accidentally put almond flour in instead of regular flour and you didn't label it as a possible allergen, or metal scrapings from one of your blenders goes into a batch and you need to pull those things off the shelf. You know, Product recall insurance is really great because it doesn't have to be like an FDA recall where they're saying, hey, you have to pull this stuff off the shelf. Recall insurance a lot of times is, me as a business operator, I notice something that I don't feel is good enough in meeting my quality standards, so I can pull that off the shelf, and then recall insurance will help cover those costs. Um, when you're looking for what your tenants are providing you, a lot of times you'll ask for a certificate of insurance, but you need to make sure that you're not just taking that certificate of insurance and you're saying, okay, they gave it to me, everything's good to go. You got to look at the coverages they're covering as well. So, like, do they have general liability? Do they have product liability? So, are you manufacturing products together? Are you they're using your space to have prepackaged food and they're sending it out? So do they have that product liability insurance? Um, are they listing you as an additional insured on that COI? That's very important. So you always want to make sure that those things are taking place and not just, hey, I got a COI, we're good. You got to make sure that you're looking at their limits of coverage. That if they're producing anything that's alcohol related, they have liquor liability. Just cover your bases type situation. Um, and then another best practice, it's not really, insurance is not a one size fit all thing. So, you know, as kitchen operators, a tiered insurance requirement is actually something that could be beneficial for you. So not just how long they're renting space in your kitchen, but what kind of operations are they having, and tailor your insurance requirement needs from your vendors um, that way. So let's say that someone is just using it to do prep for their food truck and they're just cutting vegetables. You probably don't need as extensive as coverage as someone that is making beef jerky and they're leaving a dehydrator on all night and it has a potential for, mechanical failure, starting fires, all those other things. Um, And actually, that's another question that was actually brought up a lot is how do you actually manage unattended equipment risk like dehydrators? Because they are, left unsupervised. And most of your insurance policies don't cover unattended equipment or mechanical breakdown. And so that's where, speaking with a licensed insurance agent, counsel, getting their counsel and making sure that you're getting those coverages you need is very important. You can go online to Flip and you can purchase an insurance policy. You can go online to many other carriers and you can purchase an insurance policy. But that doesn't mean that you're necessarily getting the coverage that is right for your business. Take the time, speak with someone that's licensed, someone that's knowledgeable, and make sure that you are covering all your bases. Um, you know when you're looking at a shared kitchen operation, there's many different things that go into it. Are you producing your own food? Are you co-packing? Is it a co-op where you're operating as a co-op? So you need to make sure that you have good premise liability insurance as well as product and manufacturer liability. So many policies actually fail here because they don't clearly separate those roles. So when a claim happens, carriers may dispute whether it's a premise issue or it's a product issue, and so there's a dispute with the insurance carrier on who actually pays. And so the best practice, clearly define your roles in the contracts and operations that you have. Um, so this will actually help you separate coverage triggers for your facility risk versus product risk, um, whether it's your coverage or whether it's your tenants coverage that are renting space. Um, and another thing that's a really good practice is try to avoid blending tenant and operator activities, without making sure those insurance alignments, and that's bringing you back to those certificates of insurance and making sure that, you know, you're actually reading through them and the coverages are there for you. Um, hopefully I'm not using too much, insurance lingo and you'll understand what I mean. Sorry, I can be a little bit of an insurance nerd. So, um, but another thing to keep in mind is, what limits of liability do you need? So when you're looking at your insurance, what would what could you afford to pay out of pocket before you really start to feel it? So is it $10,000? Is it $100,000? Is it $1 million? Where is that threshold for where it really can start to impact your business? And that's where you need to look at your deductibles for your property coverage. Um, food spoilage is not a standard coverage on most of these policies. So if you're in an area, coastal, and you got hurricanes, and you might have some power outages that happen frequently. Food spoilage coverage is really important. So everybody is a little different, and you need to make sure that the limits of coverage that you have really match what you're looking for. Um, I'm just trying to think of a couple other things here that I think are really important to take a look at. Um, you know, Many carriers shy away from shared kitchens due to the high variability of risk. So, as a kitchen operator, are you wanting to have everybody in your kitchen, kind of doing the same thing? Or are you an incubator where you have a little bit of everything in your kitchen? Um, do you have processes that are clear and well documented for tenant onboarding? When you're bringing those tenants in, do you have them all complete a user agreement says that they will do X, Y, and Z? Um, those things can help, when you're looking for insurance, limiting your liability and helping to reduce some of those rates. The insurers will really like it when you have those clear agreements, you have posted documentation, you have clear cleaning schedules. All those things will really help your insurance rates. um, Looking at some of these questions that have come in from your list here when y'all signed up, I really wanted to take a look at a couple of those and answer them. Equipment breakdown coverage is a really big one that has come up a lot, and who pays for it. So let's say that you, as a commercial kitchen, you have a tilt skillet, and that's there for everybody to use, and one of your tenants is using it and they break it. Most of the time, the coverage is going to fall on who is using the light, who is using it when it breaks. But it really depends on what caused it. Was it a mechanical failure? If it's a mechanical failure, that's not really a standard, cause of loss. And so you would probably want to look at mechanical breakdown coverage. Um, but let's say that a tenant is using it and they're just being real rough with it, and they drop it on the ground and they dent a pot. That's where your tenant coverage would come into play. um, and then another question here that we have that I think was a really good one: power outage. So yeah, those that are along the coast and you have hurricanes, or if you're in the Midwest and you got tornadoes that come along and cause power outages, all those different factors. Food spoilage is a thing that you really want to take a look at, because if your tenants are using your fridge, the food spoilage coverage is going to need to be covered by you. You're that's really going to come into play. So it's your equipment that the power goes out on, your equipment that causes the food spoilage. That's where that coverage would come into play. Your tenants can also have, let's say that you're renting just a space and they're bringing in their own refrigerator. They can have their own food spoilage coverage as well. But if it's your building, your equipment, you're going to want to have the food spoilage coverage to cover the tenants. I hope that makes sense. Now, a couple other things to think about are ghost kitchens. Sometimes that there's out of these shared kitchen spaces, they're running ghost kitchens, and then you're having Uber Eats and some other uh, things that are coming to pick up, and there's some additional liability there. So if you have any sort of delivery services, you want to make sure that you carry, hired non-owned auto um, insurance as part of your plan if you're doing any sort of delivery services. Um, and then if you're collecting any sort of, records from your tenants, you're collecting, you have online payment solutions, anything like that. cyber liability is something that is very important. And the number of cyber attacks and phishing attacks that happen, every year just continues to increase. So carrying that cyber liability coverage is a really good blanket to cover you in case of something that happens. Because in today's day and age, I don't know how many spam calls, phishing calls I get on a daily basis where they're getting pretty sophisticated. I actually had one the other day. So the owner of our company's name is Daryl, and I got a text message from someone pretending to be Daryl, and was like, "Hey, I need you to go out and get some gift cards, and send me the information." I'm like, how do they even know the owner of my company? Like, where do they find this information? But they're really good at it these days. And so cyber liability insurance is one of those that I would not pass up if I had the opportunity to get it. Um, and then let's see here. I think those were some of the questions that I had written down and I had answers to. Were there any other questions that have come up that maybe we would like to discuss from the people that are in attendance today?
Kyle, there is questions in the chat thread as well, um, that folks have been entering since you've started speaking. There's a couple. Mark's got a couple, and Kelly and Linda and others. So
Oh yeah, I see Mark. So Mark, your question there, who pays? And it really depends on, what happens cause the damage. So if it's a mechanical failure, the flip insurance probably isn't going to cover that. It's going to be something that you need to get mechanical equipment failure coverage for. If it's a tenant that comes in and they're rough and they break something, yes, of course we would pick up and we would cover tenant's negligence that they break something. Um, so it really just depends. There is no clear cut answer for that, and that's why it's always best to make sure that you have coverage as well, because there's something called subrogation in insurance. Let's say that something happens, your insurance can go ahead and pay to get you whole again, and then they can actually subrogate through your tenant's insurance to reimburse themselves and pay that claim. So it's always better, if you can have some sort of blanket for yourself as well, because the insurance companies work together and they'll subrogate to where, let's say your insurance company paid out $25,000 for damaged equipment. They'll go to your tenant's insurance and try and recoup that money. Linda, we require 3 million in coverage for our kitchen to gain entry into the kitchen, and they are required to have product liability insurance. So we are not held liable for manufacturing errors. That is good. But product liability isn't, I would say, the end all be all, because your standard product liability will cover stuff like, let's say someone gets food poisoning, there's a piece of metal shrapnel in there, they swallow it and they cut their mouth open, things like that. That'll cover your product liability, but it won't recover for pulling stuff off the shelf. So that's where, as I spoke earlier, your product recall insurance is very important for those self-initiated, recalls of your product in case something happens that you're aware of. We currently only require general liability insurance. Our freezer malfunctioned and swung in temperature over the course of 2 weeks, and a member lost a large amount of ice cream because it iced over and temperatures changed. Who is liable for this? So it's your own freezer that's malfunctioned. So I would say that the shared kitchen space is who would be liable for the loss of product, because it is your freezer that malfunctioned. Now, let's say that it was a tenant that brought their own freezer in and then it malfunctioned. It would be the tenant's liability. But that's where, a lot of insurance is gray areas, and there is no clear cut, policy out there that covers everything a shared kitchen needs at this point in time. And that's kind of where, Flip, what I'm working on is I'm actually working with one of our carrier partners to write a specialized policy that fits the needs of shared kitchen operators, where it has food spoilage coverage, it has mechanical breakdown options. You have your business personal property that covers all your items. It has your property coverages. And so that's kind of, when Tyler sent out the invite, she asked for you to, share copies of your policies. Every carrier has different policies. They all have different exclusions and things that are written for their policies. Um, and so by gaining access to those and being able to see what the most common coverages are, where those gaps are, that helps us be able to tailor a policy that best fits the needs of most of you. No insurance policy is going to fit the needs of everybody, but by seeing the most commonly requested things, by seeing the most commonly excluded things, where there are those gaps, it helps us, fill those gaps to the best of our ability. And that's really what we're working on here. And I hope, within the next, 6 to 12 months, we can make some real progress, and we can have something out there that will fit the needs of most shared kitchen and commercial kitchen spaces. Let's keep going through these here. We're in a space, we had a tornado that caused a power outage. I didn't own the building, and the insurance company refused to pay for my food spoilage because I was renting the kitchen, and so my insurance company had to pay. So I don't know if that means like your personal insurance company had to pay. Yeah, most commercial insurance policies do not cover food spoilage. It's explicitly excluded in those policies unless you purchase it. So that's something that you really want to make sure that, if you do have a lot of, refrigerated space, things like that, that you have perishable items, that you want to make sure that you have food spoilage coverage. Thank you for sending folks to flip. Since not everyone will need product recall coverage, is it an option while purchasing a flip policy regarding the equipment question? Yes. So we've actually developed 4 months ago, we rolled out a product recall offering on flip. So when one of your tenants is purchasing their flip policy, we have tailored a small product recall offering for those vendors. So we have a $10,000 option and a $25,000 option. And then anything that's above that, I mean, we can write up to $2 million in product recall insurance. We just didn't think that it was something that was really necessary to, put online. But just because there is no one out there that has it, we want to make sure that it is available to purchase. And it's a really solid product that they can grab. And it's fairly reasonably priced. I think it's $109 for the 10,000 option, and 139 for the 25K option for a year. So it's really reasonably priced, and it does cover you for any of those recall issues that come up. Building insurance versus business insurance seem to overlap a lot. How do I make sure I'm not paying twice for overlapping coverage? So building insurance or property insurance is meant to cover your building in case of, a loss by a covered peril. So there's different types of, covered perils. There's open peril policies that cover basically everything except for what's excluded. There's named peril policies that cover a list of perils such as, fire, flood, or fire, water damage. I almost said flood, which is a big no-no. No insurance policy is going to cover flood. You need a flood insurance policy if you're in one of those areas. And then your business insurance is there for, your general liability needs. And then you package other coverages on top of that, such as business personal property, product recall, liquor liability, product liability. So so you have a general liability policy, and then you package all those other coverages on top of that, and that's why it's called a commercial package policy a lot of times. So building insurance is covered the property against a list of covered perils. Business insurance is, there for your liability. So let's say one of your, like, you went in and you cleaned your commercial kitchen and you didn't put your wet floor sign up, and one of your tenants comes in and trips and falls and breaks his arm. That's where your business insurance would come into play. Um, Are we looking to include a business building insurance for standalone buildings owned by the shared kitchen? That is something that we're working on. And that's why, another reason that we asked is, property insurance is a very, very tough coverage these days. Your number of, you know, natural disasters is on the rise. Every year there's more and more wildfires. Wind and hail cover is hail. We've never had hail here in Florida where I live, and we had bad hailstorm a couple months ago, and that's unheard of in these areas. So weather happens, and we are looking to add property insurance, but we want to make sure that we're doing it right, and we're covering you for what you need, and we're trying to make it affordable, because property coverage, building insurance is so expensive that we want to make sure that we're able to tailor it to the needs of most and get them what they need, without breaking the bank. Does Flip offer food spoilage insurance for tenants? So we don't currently have a standalone food spoilage insurance coverage. That is something that I'm actively working on. But as part of our inland marine coverage, if there is a covered peril, let's say a fire and other things, and someone steals a generator and causes a power outage, there is spoilage included in our inland marine as long as it's caused by a covered peril. So I say yes and no. It just depends on the type of loss. Our underwriter determined the closest classification for our shared kitchen is a grocery store. I've actually looked at that, and that is very interesting because a lot of grocery stores have that deli area and they have a bakery area as well as foot traffic. So I do appreciate you, Reagan, for bringing that up, because that is something that I've actually looked into myself. So thank you for all these questions. These are really good questions. Troy, was there anything I missed in there?
Well, one thing, and I'm putting it in the notes right now, but is where to send all of the policies. And if you could just, and you kind of have to an extent explained a little bit about why, how this is going to help us, from the standpoint of having folks being willing to share a copy of their current, for those who have a shared kitchen, a current copy of their policy, and what are you going to do with that information?
So first and foremost, I can promise you all of your information is completely secure. What we will be doing with that information, like I briefly mentioned, is we'll be looking at exclusionary language in the policies. I want to see where the insurance companies that are your current carriers are limiting their coverage in places that they don't necessarily need to be, and that you're missing out on coverages. So is it specific language that's saying we will not cover X, Y, and Z, or is it a blanket coverage that they're using? That will really help me when I'm going in and I'm writing our policy. So my job is I will actually be writing the entire policy language. I will be taking forms from ISO, which is your standard insurance, language form library that most states have adopted, and then I will be writing some of our own proprietary policy language that fits where our customers need. And so just providing those policies helps us get a better understanding of where the gaps are.
I'll just also mention that it's rare to be able to see how the sausage is being made, per se, when it comes for an insurance policy. Usually a carrier will put it together and then ta-da, and here you go, and people choose. But by having even this webinar, getting your feedback, your questions, as well as future questions or feedback is super helpful for us. Because even just the class codes, that's what drives the insurance industry is class codes. And it was mentioned a little earlier about, for instance, a grocery store. And that has a big impact on the industry. And there are probably folks right now that have coverage, but the way that whoever wrote their policy classified it and what class codes they used may have been misclassified. In other words, they wanted sometimes they want your business and they'll put you into a class code that isn't quite what you are. And if a claim comes around, they may pay the claim, but then not renew you because now they understand you're a commercial kitchen and they have necessarily concerns. So that's part of why the whole need for this, for creating a policy in the first place. And Kyle, could you speak to a minute about typically how are people buying policies on the market, and what kind of market are they buying a policy for a shared kitchen today, and what's going to be different about what we're doing?
Yeah, and so what a lot of times what's happening is you are going to, you're going to your standard carriers out there. You're calling Liberty Mutual, you're calling the Hartford, or one of the big box carriers. They take the information that you're giving them. Say, okay, I have a building, I have 10 stalls that I rent out on a monthly basis or daily basis or weekly basis. They're open 24 hours a day. They take all that information and they're putting it into a rating algorithm, and they're giving you a price, but they're not really understanding what coverages you need. They're saying, okay, the closest fit that we have as a class code is a restaurant open 24 hours a day, fast food. They might write you as a fast food restaurant. Or in this case here, the closest thing that we have is a grocery store. So there isn't a class code that has been developed by any insurance companies that is for a shared or commercial kitchen space. And that's what we're taking on the task of, is we're trying to get as clear of an understanding as possible, what insurance coverages you need, what limits do you need. Is everybody out there carrying a 1-2 limit? Do people have umbrella policies on top of their commercial kitchen as well? Do you have a 5 million umbrella? Do you have all these other things that, as we go and we develop the rating structure for commercial kitchens, we basically are setting the standard, and with your help, we know that we're writing something that's going to be, properly cover everybody that purchases the policy. Because as of now, there isn't anything out there that is a one size fits all for commercial kitchens. And that's really what we want to develop, is we want to know, yes, it's got food spoilage, it's got mechanical breakdown, it's got property, it's got your business property for all your tools and equipment. It covers unattended equipment such as dehydrators or smoking machines, things like that. It covers 24-hour foot traffic. So none of these policies out there cover all of these things, and we just need to better understand those needs so that we can make sure that we do.
Kyle, Mark asked a question about just what does the flip policy, and just looking at the notes here, what does the flip policy cover as far as coverage levels and types of insurance that are included? I think it'd be good just to give an overview.
Yeah. So this flip policy as it stands currently is not written for commercial kitchen operators. It is written for those that rent space in a commercial kitchen. So, we have a 1-2 GL, and then they can purchase up to, I believe, 5 million of umbrella insurance if they need. We have cyber liability coverage. We have um, products liability. We have damage to rented premises. So that's another interesting one, is damage to rented premises. So with most standard carriers, damage to rented premises is an open peril coverage for the first 7 days. After that 7 days, damage to rented premise only covers fire. And that's how the flip policy currently is written as well. That's your industry standard, and that's something that we might need to look at when we're writing this commercial kitchen policy. But we cover, I would say, 95 to 98% of all the customers' needs with the flip policy, and then the additional add-ons that we have. So we have a standalone liquor liability policy that can be tailored for those that are making kombucha or some other alcoholic beverages in your commercial kitchen space. But yeah, I think it really will tailor it. The problem is we have the flip policy right now. We know what we cover, but we don't know what the commercial kitchen covers, and so that's where the gaps are. Because we know we cover A, B, C, D, and E, but we don't know if the commercial kitchen is picking up E, F, G type situation. I hope that answered. And then I see all of my startups get insured by Flip. I've only had one startup turned down by Flip, and they were doing fermentation like kombucha. Yeah, so I actually just mentioned kombucha. So the standard Flip GL policy has an alcohol exclusion on it, and since kombucha is alcoholic in nature, the standard Flip GL policy does not cover that. But if they were to tailor their Flip policy with a liquor liability on top of it, they would be fully covered. That's why in that particular case they were turned down, as they probably did not purchase the liquor liability insurance aspect. And so we don't want to sell someone a policy that's not going to cover their needs. And then, Haley, will you offer policies for both kitchen owners and operators and kitchen tenants? I'd like to advise. So, yes, that's the big goal here. Hopefully in the next 6 to 12 months, like I was saying, is we want to have the operator policy and the tenant policy that, as kitchen operators, I've got the flip owner policy, and then all of my tenants are getting the flip tenant policy. I'm 100% covered because all those gaps are filled. That's the ultimate goal.
Kyle, Sarah had a question a little further up as well. She said a lot of our members are either farmers or fishers and add us to their existing fishing vessel/ranch policy. Is that generally acceptable, or does it come down to knowing what the exact covered terms are?
That's interesting. So they're fishing and then going in, I guess, maybe cleaning fish or something. Without being able to see the policy and read the policy language, I can't say yes or no. But I guess the only way to really test it is if there is a loss, and how did the claim situation get handled. But Sarah, what I would do is I would ask for, a copy of their insurance policy, and, read through the policy language. I know a lot of it can be a little confusing, but, you can use, AI, and you can say, hey, what does this particular information mean? type situation, and it's usually pretty good to give you a general understanding of what the legalese language in a insurance policy means in layman's terms a lot of times if you do have questions like that. But that's really what I would do is I would ask for a copy of their policy, just make sure that it's not excluded. Okay, I don't think I see any other questions that were missed. Oh, one just came up. What's the average cost for full coverage of a shared kitchen? Is it based on square footage? That's something that we're trying to figure out. I don't know um, how other carriers are currently rating it. From what I've seen is your property aspect of commercial kitchens is rated on square footage, and then obviously building material. If it's made masonry, it's different cost than if it's a pier and beam, or if it's wooden frame. Those factors all come into play when it comes to the building cost. And then your general liability aspect of a shared kitchen as a operator is going to be, a lot of it is your annual revenue, how much sales you're making on an annual basis. So there's going to be two factors there. If one's your square footage of your building for your property coverage, and then your annual revenue for the commercial general liability portion. And then Mark, so if a tenant rents from us on a yearly basis, they are only covered for 7 days. After that, it's just fire. So that's how most policies are written for damage to rented premises. That is this industry standard. When it comes to, damage to, let's say, damage to equipment or things like that. That is your industry standard. That's what you're going to find on almost all policies out there. That is how damage to rented premises works. And that's why we're looking at changing the language of it, because it just doesn't cover you for how you need it. And that's where a lot of the time inland marine coverage comes into play for property owners, your commercial kitchen owner. If you have business personal property or business inland marine coverage, you're going to be covered if one of your tenants accidentally breaks some of your equipment or damages some of your equipment. Now, let's say that one of your tenants turns on and floods out the kitchen with a sink. Their liability is going to cover that. It's not going to cover them putting a hole in your wall with backing into with a table and they accidentally put a hole in your wall type situation. That's where your damage to rented premises is not going to kick in. But like your big liability for, let's say they accidentally caused water damage or from flooding a kitchen sink or something like that, that's where it'll kick into play. So there's a lot of nuance to it. My organization has insurance where our building is, so should we have separate kitchen operations insurance versus the nonprofit business? Let me reread this to make sure I understand. So my organization has insurance where our building is. So should we have a separate kitchen operation insurance versus the nonprofit business? So you're saying that I guess, Linda, I hope I understand you. So it sounds like you have two separate business entities. You have one that's a nonprofit, and then you have a separate kitchen. Okay, you have several nonprofits in there. So each separate business entity has to carry their own insurance policy, is what I would recommend. Yeah. Okay, then Shaylee, for example, our shared commercial kitchen offers commercial mixture that is available to all tenants. One of our tenants let us know it was broken when they came in one night. We could not identify who broke it, but our quote assessment determined that it was forcibly broken. There are pieces missing. Are we liable, and would mechanical breakdown coverage have helped? Mechanical breakdown coverage in that particular case, Shaylee, probably would not have helped because it was forcibly damaged. Your mechanical breakdown coverage is going to be, the engine fails on your mixer type situation, and therefore it is out of commission until it's repaired. A forcibly broken item, your tenant's liability coverage would kick into play, or your business's personal property coverage would come into play so that it would be covered under either of those instances. But mechanical breakdown would not have helped in that. These have been some really good questions, everybody. I really appreciate you taking the time to, put the questions out there because, these are the types of things that I'm thinking about as I tailor this policy. So these are exactly the types of questions I'd love to hear because this is what's important to you. And what's important to you is what we really need to focus on as we develop this. So thank you all for these great questions.
Yeah, and Kyle, I'll also mention that we have, even though we're currently building a program specifically for a shared kitchen environment, there are folks who probably are not going to be able to wait, 6 months to a year, and they're going to have to find some solution, just like others have as well. And I will just mention that we do have the resources, and we've helped several shared kitchen owners get a quote on the market that is out there now, and that is an option as well. So just know that we do have resources, and that will come into play, ranging from how close to the ocean you are. That, of course, is a variable, as well as everything else that Kyle has mentioned. But I can put in the chat as well is a resource, even if you just simply want, it's time to renew and you want to see if getting another quote from another source is going to be beneficial. Ultimately, the goal, though, is to have a solution through a primary carrier that truly understands all of your needs and addresses all those situations. So,
yeah, and our sales team might hate me for saying this, but on top of what Troy is saying, even if you don't purchase an insurance policy, reach out to an agent, talk to them, tell them about your needs, tell them about your business, and they will be able to counsel you and put you in the right direction. They'll be able to give you a quote if you want one. They'll be able to tell you this coverage matters, this one doesn't, type situation. So even if you don't purchase a policy, reach out, speak with an agent. I think it's very important.
Awesome. So, Kyle, I have one more question. Keith would like to know, how will we be informed on your progress and on the insurance, and how can we get questions possibly answered on current insurance issues?
Yeah. So I would be more than happy, Tyler, to share our progress with you, and you can share with them on your platform or whatever you'd like to do. I know you're sending out, newsletters and everything. So I'm happy to, provide our updates and share our progress with you, and you can tell everybody, the progress. And then what was the second portion of that question again?
If they have insurance questions after this webinar, is there a way for them to get those answered? Where's the best place to put those questions?
Yeah. So Troy, I'm going to let you answer that particular portion of the question.
Yeah, I actually included my email address, troy@veracityins.com. And just so everybody understands, Flip is a program. Veracity is our company that we work for, and we're a wholesale brokerage firm. Flip is a program we developed. I mean, we've developed others as well, but that's kind of the relationship, and that's why my email is veracityins.com, even though I have a Flip email. But you can use that, troy@veracityins.com. If you email me and you have follow-up questions like you have, I'll coordinate with Kyle and as well as others in the company. And or even if you're looking to get a quote, I know when I was at the show in Cleveland, um, in fact, I recognize, of course, a lot of you from that, Mark, and what many others. That there were several folks even there that approached me about the fact that, hey, I need to get coverage now, and I can't wait, for longer. So we can, along with your other resources, we're more than happy to provide a quote to you on the current situation today as far as your needs. So
Great. Thank you all for joining us. I am going to put up a quick poll. If you all could please just take a minute, rate the webinar. This is our first webinar that we've done in this series. We will be doing this monthly on varying topics. Yes, the next Shared Kitchen Summit is in Providence. We are working on nailing down the dates now, so
uh,
stay tuned for that. Um, I will also share a couple of QR codes here. Oops. Um, Here for if you want to sign up for our newsletter, we will put any updates that Flip shares with us in our newsletter and through our platforms. Um, and then, join the NIC. If you're not a part of the NIC, the Network for Incubator of Commissary Kitchens, this is our Facebook group. It is Shared Kitchen Operators. There are lively discussions happening in there every day. It's a great way to crowdsource solutions and problems, and kind of just connect with the industry as a whole. And then, of course, sharing your insurance plan with Flip so they can help build the best policy for you. And you can be a part in shaping that and making sure that you get what you need out of your insurance policy. But thank you all so much for joining us. I will be following up with the recording in an email, as well as all of these links. And we'll be sharing the recording on our YouTube and social platforms as well. So thank you all again for joining us today, and we hope to see you at the next one, February 3rd.
Thanks, everyone.